Hello, guys. Today we are going to discuss StoneCo's Q3 21 earnings results. StoneCo announced an increase in higher payment volume and an increase in client base. So far, so good. It resulted in a strong top line growth. However, adjusted net income declined substantially. It was down 53.9% year over year. Investors are less than impressed, and StoneCo's share price has plummeted big time. So, what exactly happened? And how should we interpret these results? Today, we are going to discuss some of the key points from the earnings results. Hope you enjoy.
A quick look at the disclaimer section.
Starting off with the top line growth, the active client base increased substantially and it was up 2.1 times compared to the prior year. Total payment volume also saw an increase, where the 3Q21 payment volume was up 53.6% compared to last year. This resulted in an increase in the total revenue for StoneCo. Total revenue was up 57.3% year over year. Considering only micro plus small to medium businesses, or MSMB for short, the volumes were up big time. The market share of total market volume is approximately 9%. On the active client base, there was a high net addition of clients in the quarter of 294,000. This net addition in 3Q 2020 is a more than threefold increase year over year. The number of active digital banking accounts grew at an even faster pace, surpassing 420,000 in the quarter, which had more than quadrupled since a year ago. The MSMB TPV grew at a 2-year CAGR of 61% in the quarter, accelerating from 48% in the second quarter and 42% in the first quarter. While the more mature SMB operation was able to grow TPV over 70%, the micro merchants volume surged to 3.4 billion Brazilian real in the quarter, nearly 23 times higher than the previous year. Consolidated net adds in MSMB also accelerated to approximately 290,000 in the quarter. As a result, Stone reached over 1.3 million active clients. Stone's main engagement metrics also improved on a quarterly and yearly basis, such as total accounts balance, which reached over 1 billion Brazilian reals at the end of the quarter. Net cash inflow from the legacy credit product in the third quarter was 483 million Brazilian reals, thereby reducing the credit portfolio to approximately 1.6 billion Brazilian reals from 2 billion in the previous quarter. The coverage ratio remained above 100%, and the legacy credit portfolio is performing as expected, so no further provision was made. As Stone indicated in the beginning of the year, significant investments will continue to be made in engineering, sales, marketing, and operational teams to expand capability. We saw that in the third quarter as Stone incurred 120 million Brazilian reals more operating expenses, or OPEX for short. These higher costs, coupled with higher interest rates, impacted margins. It's also interesting to note that Stone has started to reprice its clients, but they mentioned that it's a difficult balancing act as they want to maintain healthy growth rates but also ensure that their merchants are satisfied. Stone's cost of services also increased as it invested in its technology registry platform, or TAG for short. There were also additional data center costs to support the growth of operations, customer service, and logistics teams. In selling expenses, Stone reported investments in the expansion of hub operations and higher marketing expenses. The third point to highlight is that the administrative expenses increased significantly, over 100% year over year. This is primarily due to 63 million of one-off fees paid to advisors related to the Lynx acquisition. Stone also reported a higher amortization expense for fair value adjustments on intangible assets related to acquisitions. This is expected to slow down in the future if Stone doesn't make similar large acquisitions such as the Lynx acquisition. If you want to hear the rest of our key points, please sign up for our page below. This will be beneficial for you as we discuss several interesting points around the outlook for the company and the management commentary. If you found this video useful, then I urge you to join our research platform. It's completely free, there are no hidden costs, and that's the place where we publish top quality research covering companies with the capability to compound in the long term. And that's also the place where we publish research discussing key investment concepts. The link is in the description section below. Guys, if you found this video useful, then don't forget to hit the like and subscribe button.